Chainlink had tons of news that they dropped at the Solana Accelerate event. Today we're going to be breaking that down with Sergey Nazarov, who's going to be joining us here in just a moment. You don't want to miss it. My name is Paul Barron. Welcome back into TechPath. I do want to thank our sponsor, and that is Coinbase. And I think one of the things around Coinbase is it's very easy for you guys to sign up and actually make your first trades. All you have to do is use our link down below. We'll put the right link for you. So you click on that, you're going to get up to $200 in a reward right now. Sometimes they do this buy 50 and earn 50, so it depends on which link you hit. But either one of those, it's going to get you on your journey for crypto. Let's get into it today. Of course, joining me is Sergey Nazarov, who's been on our show before, coming in as the co-founder of Chainlink. How are you, Sergey?
Good to see you again.
Yeah, nice to see you. And of course, lots of news coming out of New York during the Accelerate conference. You guys, of course, dropped your PR on Chainlink. CCIP is officially live now on Solana. This, of course, could really supercharge, I agree with your headline there, really supercharge the growth of Solana DeFi. 19 billion in assets. Can you, first of all, break it down for our audience that may not understand the importance of CCIP and DeFi?
Sure. So CCIP is a very widely used cross-chain protocol that has many high-quality assets on it, both in the DeFi world and now increasingly in the capital markets institutional world. And so those assets being able to flow into Solana benefits the Solana ecosystem because it means there's more assets that can be traded, exchanged, used in the Solana ecosystem. CCIP is pretty much the most secure, most widely used cross-chain mechanism in the capital markets. We've announced with more and more institutions recently, and those institutions continue to choose CCIP because of its security, compliance, and various other guarantees that bridges don't have. There are all these security risks with other bridges, all these legal issues with other bridges that CCIP just doesn't have. And so Solana's focus now on what they call the Internet of Finance is actually very compatible with CCIP, which is getting so widely adopted by institutions.
If you guys jump over to the Chainlink blog, they've got a really good statement out here that came in last year. This was kind of how this works with some of the organizations that Sergey mentioned there, including major banking, capital market, and institutions, which is really where the future of this could be going. Back to your point in terms of liquidity, this is a supercharged event in terms of the opportunity going forward. And you look at also the idea of where Jupiter, this is Jupiter Perpetuals, they're now tapping you guys, Chainlink, for real-time DeFi, also on Solana. I look at Jupiter and I think, all right, Jupiter is one of the major platforms out there. There are others, obviously, that play into this around the DeFi side for Solana. How will the partnership start to come together for you guys as you start to build this out?
So what generally happens is on chains where Chainlink hasn't been made available yet because of the integration effort that it takes to integrate it very securely. Mm-hmm. There's a large group of applications that already want to use Chainlink and have already committed to using Chainlink, and they're just waiting for the integration to complete. Right. So Jupiter, Camino, the large lending protocol on Solana, GMX launched on Solana with us. And so basically, the security and reliability of Chainlink is why it powers over 60% of DeFi today, mm-hmm. because the other oracles, whether they're bridge oracles or whether they're data oracles, they just continue to not meet the same standard of security. And it's also why Chainlink keeps getting preferred by the capital markets. It's because of that standard of security. Because what happens when you're a small project is you're not evaluating security as much. You can build your own oracle of some kind, or you can use some startup that launched on your chain and it's available. But as you have more value in the system, similar to capital markets and banks, your valuation and importance for security goes up, right? You start to value security much more because you become a target, right? If you only secure $1, you're not a real target.
Right.
If you secure 1 million, 10, 100, 1 billion, the more you secure, the more you care about security. And so what we see is that because of Chainlink security, when it goes live on many of these chains, you kind of have this migration onto Chainlink because many of the top protocols have grown and they've prioritized making it secure over other things, right? Because they consistently see others getting hacked that don't use Chainlink, and then when they use Chainlink, they don't have a problem.
When you look at the scale of the market right now, Sergey, the size of what we're seeing in terms of institutional moves, which I would say to a certain extent is still very early, where do you think this can go in terms of where Chainlink's position as somewhat of that cornerstone for the industry, especially around DeFi? Where do you think this can go if you were to look out in a couple of years and say, this is where Chainlink will be?
I think we're in the early stages of this convergence of DeFi and TradFi. We're seeing more and more institutions go on chain, provide payment on chain, provide assets on chain. I think we're going to enter a world of tokenized equities, tokenized commodities, tokenized funds. And all of those institutions highly value security, reliability, and compliance. And so Chainlink already powers the majority of DeFi because of that dynamic that I described, where as you secure more value, you value security, right? Because you're securing more user funds. There's higher risk of you getting attacked than something that secures less value.
Yeah.
You become an attractive target. And the institutions have been operating in that way now for decades. And so I think when they evaluate the other systems out there that are run like on a single node, but they say they're decentralized, or they operate in some highly insecure way where they keep getting hacked again and again, that these things will just not come anywhere close to meeting their standards. Whereas Chainlink has been very specifically built by a community of security experts and has really invested in meeting that high standard. And this is why you see it getting preferred not only by the larger protocols that fall into the dynamic of having to value security because of the amount they secure, but also by the capital markets and institutions, which have been thinking in that way for decades. So
exactly, yeah.
That's what I see happening.
All right, okay, so you mentioned one thing that I think is important, and that is this transition that we're already starting to see happen now. Here's Kraken, who is tapping Solana as a potential for tokenized stocks. And you look at this shift that could be occurring. This is very early stage right now. This most likely will happen in other ecosystems. But Sergey, in your opinion, how would this affect maybe companies like even Robinhood going forward if we really do see a tokenized securities layer that starts to make its way into the market?
I would say the race is on. I would say now everybody from the financial market infrastructure community to the banking community to the asset management community clearly see that there's a large enough market on chain, there's enough liquidity on chain to justify issuing all of these assets. There's enough stablecoin value, there's enough ways to get paid for these assets on chain.
Right.
And we're kind of at this critical tipping point now where I think you can get into a virtuous cycle of more and more high quality assets leading to more and more payment systems and methods of payment becoming compatible with blockchains.
Interesting.
That's or liquidity coming into blockchains, which creates the larger and larger market for the assets, right? So you kind of just start to have this cycle of high quality inventory, more and more liquidity, and that should lead to the success of the issuers, the success of the assets, which will naturally be seen by the other issuers, and then they will come into the market to partake and be part of that success, right? So this is kind of where we are, I think now. We're at the start of this virtuous cycle where there's enough value to justify more issuances. There's enough liquidity to justify more issuances. And I think it's going to kind of snowball from here as long as the larger global macro environment stays positive.
Yeah, I think that's going to be the key. This was an interesting statement from you guys' X account. The thing that I drew to it was the milestone marking the first of its kind cross-chain. This is atomic settlement of tokenized assets between Connexus there and a permission blockchain network. So this is back to your point, how we're going to see that uptake within the banking community going forward. So you look at that, and then you look at your statement here, the similarity between all of these, government chains, cryptocurrencies, tokenized, RWAs, privates, etc. To your point, Chainlink interoperability is kind of the king of the hill there. And I think that is a huge part of this. What do you feel is going to happen first? Do you feel like we're going to see more of the traditional finance side of it, RWAs, or are we going to see something more from the macro side that would come from governments, municipalities, agencies, et cetera, in terms of adoption layers happening, or is it all going to happen at once?
I think it's RWAs for assets and payments. The asset side has been tokenized funds, some from institutions, some from fintechs. I think now you're going to start seeing things beyond tokenized funds, like tokenized equities, tokenized commodities getting more popular. Then I continue to see more and more stable coins appear, more and more dollars and other fiat currency turned into stable coins, which is liquidity that can be used to purchase those assets. We are working heavily on getting payment systems connected to blockchains so that the liquidity inside of those payment systems can be used to buy the digital assets on chain, once again, accelerating and speeding up that virtuous cycle in positive ways. And so I think it'll happen at this kind of grassroots innovative level of the fastest moving institutions and some of the most kind of forward-looking and competent fintech and blockchain teams for digital assets and payments. And as the digital assets and payments world starts to see more volume, as you start to see trading pairs appear more and more on public chains and some private chains for derivatives, you'll start to see enough volume to justify that virtuous cycle, right? Like what we need to do now as an industry is make sure the systems are secure, make sure they can meet the compliance needs of the large institutional issuers and purchasers, and make sure that, well, I don't know how we can make sure of this, but hope that the global macro economy keeps going in a positive direction so that this new way of issuance, this new way of payment, this new way of doing collateral management has a market that's receptive to adopting it, right? So if all three of those things happen, I think we're really kind of pretty well into the beginning of that virtuous cycle.
Yeah, in a good place at the right time. Some things that we've been watching that seem to be a little bit under the radar. We showed a little bit there of the XSwap. Solana is now an XSwap. This is going to enable some unique functionality, including one which would be EVM liquidity. Let me kind of zoom in on that. And this is a good example of this, where we could see Memecoins at some point shifting over to RWA, ETH to Sol, etc. Any chain, one platform kind of scenario. This, of course, being built on Chainlink. When you think about memes today and how big of an ecosystem Solana has been around that, do you feel that they are kind of this next generation of liquidity for these early stage markets, especially around whether it's RWAs or other assets out there?
Meme coins are not something I totally understand and have a lot of expertise in, but to me, at least initially, they appear to be highly speculative. And so they attract a certain type of market participant. And some of those market participants do well and some of them don't do well. But in my experience, the subset of market participants, whether they're miners in the early days of our industry or people who invested in the first tokens even before Ethereum, or then the people who invested in Ethereum,
right? The
gains that they make often find their way back into the crypto universe, right? So if you made some kind of gains from some kind of meme coin speculation, a large percentage of that will flow back into the crypto world as liquidity and then be used on various things, including RWAs, if you want to diversify towards something more stable and predictable. So generally speaking, my view is that the more liquidity there is in the blockchain stack and the blockchain format and the blockchain way of doing transactions, the more payment systems, the more value in stablecoins, the more high quality assets that can be an inventory that can be bought with those payment systems and stablecoins, the better off our industry will be.
Yeah, here I've got a clip here that I think maybe gives some validity to this as well. This is Hadley Stern. We had him on from Marinate the other day, and he talks about this, but take a look.
Like, why did meme coins happen on Solana? I don't think it's a cultural thing. I just think it's because the chain works and the chain is cheap. So, and if you look at Trump coin, for better or worse, the first 24 hours that it was released, the Solana blockchain did about 10% of NASDAQ volume. And there was no hiccup on the blockchain level. There were some hiccups on some of the dexes. That's kind of interesting. So then really, meme coins are kind of the MVP for real world assets on chain at scale. No, Solana is a functioning network because it's meme coins, and that's where they took off. And then what can we learn from that as we look to build real world infrastructure?
And I think one guy that really understands this is President Trump. You know, he had his Trump dinner last night, and there were some pretty big people here. But the point is that you have the President of the United States really understanding the ecosystem of blockchain and one of the things around it, such as meme coins. So it does play into maybe the future of this. So I would agree with what you were saying, is the liquidity opportunity is definitely one to keep an eye on. I want to get into your opinion in reference to the stablecoin bill that's going through the Senate, well, eventually the Senate, and that is the Genius Act. When you look at the potential here of this first happening, most likely going to, what do you feel is going to be the true impact? What would be the next steps after a stablecoin bill is in place and becomes law?
Not to be too repetitive, but liquidity, right? It's the ability to have more cash on chain, and that on chain cash can then be used by more accounts to buy the inventory of assets, whether they're highly speculative meme coins, whether they're less speculative cryptocurrencies, or whether they're non-speculative hard asset backed real world assets, right? The stablecoin legislation will allow more and more institutions and various other issuers to issue their own stablecoin.
Right.
And that issuance of a stablecoin fundamentally means that instead of purchasing power or cash or liquidity being outside of the blockchain system, it's now inside of the blockchain system. It's inside the Web3 financial system. So I think that will be massively beneficial because it's a matter of the cash that's available, right? What is the market size of what your asset can access if you issue it into the Web3 financial system? If it's $200 billion in stablecoins, okay, that's an impressive market size. If it's $1 trillion in stablecoins, that's a different story. If it's $10 trillion in stablecoins, that's a market everybody wants to issue an asset into, because if even a very small percentage of that decides to buy your asset, you're extremely successful as an asset issuer. So I think you have these two sides. You have the payment side and the asset side. They both have to grow. But if one of them really shoots out and starts creating really high quality on-chain tokens, in this case stablecoins, you enter kind of a different and new exciting world for our industry.
No doubt. With that being the case, Sergey, you look at the preparation that some of the banks are making right now. Here's JP Morgan, Bank of America. There's some conglomerates out there that are looking at the potential to go out with a joint stablecoin. Do you think this will work? Do you think banks could enter in to the stablecoin race and go head to head with companies like Circle and Tether?
I think banks will enter into every race where you have a form of payment or a type of asset that is on chain, as long as they are able to do it legally. So the only reason that the banks haven't entered the stablecoin race or the RWA issuance race or the fund tokenization race as much as they could have is just lack of legal clarity, which creates a kind of compliance risk. And banks pay tens of billions of dollars in fines every year for not fulfilling their compliance obligations to governments. So they're extremely sensitive to this. Like the non-compliance can wipe out a bank's profit, basically.
Right.
So if you can comply and you can make a stable coin and you've been in the payments business and the institutional or retail payments business for the last 30, 40, 50 years, of course you're making a stable coin.
Sure.
If you're in the equities or commodities or asset management fund business, and you can make a tokenized equity, tokenized commodity, tokenized fund, and open it up to a large market of purchasers because of all the stablecoin liquidity and other forms of payment on chain, then it's a fantastic opportunity. this is why when people talk to me and to us about regulation and DC, we explain that it's kind of the final unlock for our industry, because there's just such a large group of market participants that are limited legally from entering our industry.
Right, right.
And then they also have certain technical limitations around data, cross-chain identity, which are the problems that we solve. But in the process of solving those data, connectivity, and identity issues, we understand them pretty well. And it's pretty clear to me that we're ready to solve all of those technical issues for them. And they're now becoming quite ready, as you can tell from the announcements you showed, to launch.
Yeah, I think it's an exciting time for anybody that's looking at digital assets as a future, whether you're looking at it as a career or you're looking at it as an investment vehicle or even a business now that's starting to utilize digital assets within it. The opportunities are going to be really growing. Last question to you, Sergey. You look at the current framework of what's been proposed out there on the market between Coinbase and Ripple taking a run at Circle. How do you see that playing out in the market, and what kind of impact do you think it would have?
I think there is a kind of advantage with stablecoins from getting some early adoption and getting widely integrated. But I think fundamentally stablecoins are a matter of distribution. And I think the amount of people and accounts that are now on top of a stablecoin is a very small percentage of the amount of cash and the amount of client demand and the amount of liquidity that could be represented as a stablecoin. So I think it's pretty early. I think if some acquisition like that happens, it'll be interesting, but it reminds me of like the acquisitions that would be happening in the very earliest days of the internet.
Yeah.
And some of those worked out, some of those didn't work out. Sometimes the company that got acquired became the whole thing, right? So sometimes it was fantastically successful. That's what it reminds me of.
Well, listen, there is a lot going on right now, Sergey, so we'll definitely keep you on tap as things start to materialize in the markets with the stablecoin bill, as well as maybe the Market Structure Act that's going to really start to change things, I think, globally for the digital asset market. So thank you again for coming in today. We appreciate it.
My pleasure.
You bet. All right, you guys, if you're not in the Diamond Circle, that's our own private group that you can take part in, and it's our email list. We drop in additional research. It also reminds you of different videos that we drop, etc. It's a good way to keep up with what we're doing here on the deep dive. Of course, if you want to talk to me, you can actually do that in our Telegram group. We also leave a link down below for that. Of course, follow me out there on X @Paul Barron. We'll catch you next time right here on TechPath.